Hello accounts people, time to have a look at posting from Daybook. So I borrowed this question from Osborne. It's publicly available on their website. Very useful tests. And what we have here then is our sales daybook, one of our four main daybooks. And we have four customers who bought off us at the end of June. There's the invoice numbers in consecutive order because it's our own sales. We should be issuing invoices in consecutive order. We have the total, gross, inclusive of VAT. We have the VAT and the net. The VAT, of course, is the government's money that we'll pay over to them at some point in the future. And to save time, I've put into our sales ledger our individual four customers, and they will pay us, or on their account it will show the total, the gross. Inclusive, it all means the amount with the VAT. So that's the amount that they are going to pay us. They pay us the whole lot, just as you pay the amount plus VAT when you go shopping. So if we have a look at our double entry next, we've got sales. So 3065 is the total of our daybook. One of the main purposes of a daybook is to reduce the entries in a sales account. If we had 100 invoices a day, that's 500 a week. That's an awful lot of invoices in one little ledger account. So we have tills and daybooks to reduce that. Now sales, to be learnt off by heart really, are credit entries. The VAT is the next item, the next column, so we'll deal with that one next. Working from the right hand side, that belongs to the sales. It's the same side as the sales, which means that our sales ledger control account is a debit entry. It's an asset that our customers owe us some money. It's debit the sales ledger control account. If it was a cash sale, it would be debit the bank, and that means we now know which side of our account to put our customers. They are all debits because they are the same side as the control account. So let's post these into our individual accounts. I've saved a little bit of time. So this is our Britannia Limited. Whatever reference makes sense. Companies will have their own way of dealing with it, and AAT have their own style. So it's sales daybook, and it's invoice number 208. That should do to identify it properly as the debit entry. Anfield was the 26th of June, invoice number 208. So that's our individual one, so I've posted the next couple in advance, and then into our double entry system. So now we're on to this part of it. Sales. So at the end of the month, because we need the last day of the daybook, we've got one on the 30th. Appropriate definition. Well, sales daybook, that's definitely. Bit of variation here from company to company and examiner to examiner. Sales ledger control account, because that's the double entry for it. Sales daybook, definitely it's the total we're posting. And we're posting into our sales the net, not including VAT, because our VAT has its own account. Again, sometimes awkward to find the appropriate reference, but as long as everybody's consistent and people know what you're typing in. So it's the double entries, again is part of the control account, and this is our control account. And this was the debit entry. Sales daybook, and of course the double entry is now the sales, so that's the 3678 that is up here. So that's just our initial entries into our control account. So learn off by heart really the entries. Remember, customers accounts are exactly the same way round as our sales ledger control account, or receivables account, or debtors control account, as it still is on some versions of Sage. And here's our first invoice going in then, and then they've paid us fairly quickly. So they paid us, well, they sent goods back 2 days later, which reduced the amount that they owed us. Then they paid us £40, taking a discount for paying us quickly. Well, 10th to 13, that's pretty quick. And then by the end of the month there was another invoice gone in, and hence that's the only balance on there, balancing off last day of the month and bringing it down on the first day of the following month. If that was our only customer, not making many sales this month, this is how it would look in our control account. We just have the two invoices lumped together in our sales ledger control account, and then our only return, our only receipt, and our only discount allowed. Discounts allowed sometimes is a day book as such, or it can be found as a total in the cash book. And exactly the same numbers on here because that's our only a customer. Not a very healthy business with only one customer who spends £200 with you and returns 50 of it. So other day books then. So purchase returns. Occasionally students get confused. They don't read it quick enough, expecting having done sales, the next one to be purchases. It isn't. It's our purchase return day book. So there's our two suppliers because it's now purchases. Same idea in the amount. It's still the total. Let's have a look at our individual accounts then. So purchase returns in this case, VAT, and therefore the purchase ledger control. So purchases are debits, the return will be a credit, and that will be the net. The VAT is the VAT amount, and that's also the credit, which means that our 1464 must be our debit entry into our control account. So when we made a purchase, we owed money to our suppliers. This is us owing less money to our suppliers. The control account, the debit, the individual suppliers' accounts will be the same as a debit. So two more quick ones to do then. So purchases day book. So this is straightforward purchases. So we've got our individual customers again. 948. 1482, and then if we do purchases will be net 3830 of that 766. This is money we're going to claim back from HMRC. Purchase ledger control account. So these are straightforward purchases, so we owe money to our suppliers. It's possibly the easiest way initially of remembering things. If you buy something off your supplier, you owe them some money. Credits are liabilities, purchases are debits, and the VAT belongs to the purchase. One last one then, we've got a sales return day book. We have two customers sending stuff back, so again they check the credit note numbers are in order. And again, just watch out in case it's reversed. Some people would have net, VAT and total. So that's our customers sending stuff back to us, which means we need a sales returns account, a VAT, and it's still to do with how much our customers owe us, so it's still the sales ledger control account. So sales were credits and purchases were debits. Sales return is a debit, and that will just be the net VAT and that one, so that belongs to there. That's double entries, 498 debits, 498 credits. So our customer's account will be credited